All right, we're finally at the strategy lessons. This is lesson 8, strategy 1, the ABO or the advanced breakout. So we got 5 strategies that we're going to be working with, and they're pretty much built on top of each other. So strategy 1 happens first. Strategy 2 happens second. Strategy 3 happens third. Strategy 4 typically happens fourth. And strategy 5 happens a little bit earlier, but it's the last strategy. All right. So, but they're pretty much in order. So when we're talking about like the wave theory, wave 1 breakout, wave 2 pullback, wave 3 run, wave 4 pullback, wave 5 run, it allows us to kind of capture all of it, right? So when we're making our watch list, we're pretty much just looking for these strategies, right? Over and over and over again. And they tend to repeat over and over and over again, right? So this is kind of where we put the whole system together now. Everywhere from the everything from the idea generation to the analysis to the execution and the management, and obviously once the trade is closed, journaling and so on. Right. So with that said, let's kind of look at our little lesson plan here. And you pretty much might want to copy this down, or you might also want to add to it, right? So this is lesson 8, strategy 1, ABO, part of level 1, the trading system. And the strategy is called the advanced breakout. Short form is ABO, right? So the advanced breakout. Now it's advanced, right? So maybe you're not necessarily going to start with it. You can look for it. I do recommend learning it, studying it, and trying to find it in the market. But this is one of those strategies that you want to be a little bit more patient with, right? It's probably not going to be your most popular strategy, right? Like for me, about maybe 5 to 10% of my trades are the advanced breakout, right? So they still happen, but typically I'm just like, either I see it too late or because you need to be quite prepared to find this strategy. The strategy 2 and strategy 3 are very easy to find, right? And a lot of times I was just like, okay, well, maybe I'm not that comfortable in this setup right now, but once this breaks out, I can still execute strategy 2 and strategy 3, and maybe strategy 4, and maybe strategy 5, right? So a lot of times I also pass up on the ABO because it is a little bit more riskier, a little bit more advanced. But if it breaks out and actually goes in the direction that I wanted, sure, maybe I didn't take a trade. My bias played out, and now I can look for strategy 2, strategy 3, strategy 4, strategy 5, right? Because they all kind of follow the same process, right? So that's kind of what I mean. This is why this strategy might be only about 5 to 10% of all your trades, right? And it probably shouldn't be more than that because it means you're just over trading it a little bit. So with that said, there's a few major characteristics, which are the first few points. Strategy 1, the ABO, is a wave 1 breakout. When we're talking about the LEA wave theory, it's a wave 1 breakout. So it means that the trend on a lower time frame has come to an end, and now it's breaking out. And we're trying to capture that wave 1 breakout, right? So it needs to be hitting some major support and resistance on a higher time frame, such as a daily, where there needs to be a clear major level on a daily chart that's telling you, hey, this is going to turn around, because there's no reversal candlestick yet. This is like the first thing that happens, right? And it must mean that higher time frame, the run on a higher time frame or the pullback on a higher time frame is ending as well, as it's hitting that major support and resistance level. You got to believe your analysis needs to back this up, right? It's like there's a major support and resistance level here, and I believe that this daily run or this daily pullback is ending or will end at this support and resistance level, right? And then you're trying to confirm that with the lower time frame. So is the lower time frame, is the trend on a lower time frame ending? Not has it ended, is it ending? You know? And now you're kind of looking for deceleration and some sort of a price action pattern on that lower time frame, right? And now you're trying to capture the move. So that's kind of like the idea part of it. Now, how does this look like before we dive into the entry, target, and stop loss? What does that look like? Well, let's have a look at quickly an example, which is the example that we're going to be working with for this lesson. So when we're looking at this right now, it starts off with the daily chart. Daily, 1 hour, and then 4 hour, right? Daily is where we're looking for a major level, where we're looking to make a daily direction prediction, and so on, where we believe, hey, you know what, there's a major level right here, and you can kind of see it. Price action on a daily chart is stalling in this area recently, right? And it acted as a little bit of support and resistance in the past, a little bit more in the past. And over here, it kind of looks like maybe a zone, right? Kind of where this red line is also has a few hits. So it kind of looks like a zone, a decent zone. Right, so that's our major support and resistance level. And what we're talking about when we're talking about major, it's like price action hit it, fell, hit it, fell, you know, hit it, fell, hit it, reverse. It's just like it has major rejections. Now, on the 1 hour time frame, which is the bottom left, right? This is where we got to believe, okay, to confirm that bias that, hey, this daily chart might be stopping or rejecting this area and there might be a reversal. We don't have it yet, but there might be a reversal on the daily chart. We got to start to confirm that with the 1 hour. So the 1 hour time frame, we got to say, hey, this trend on the 1 hour time frame is coming to an end because of this, right? So first up, we got this bullish trend here that's been going off for a little bit. Wave 1, wave 2, wave 3, wave 4, and then started to decelerate into this wave 5. And then started to form a price action pattern at that same horizontal level, right? And there's bearish MACD divergence at those highs as well. That's pretty much tells us when that happens, when price action is flat or still moving up, and the MACD is moving down. That means there's divergence, right? Because when price is moving together, like right here, price is moving up and MACD is moving up, there's nothing. It's converging, it's moving together, you know. We want it to be diverging, meaning going in the opposite direction. And that means that at some point, trend will reverse and will start to follow MACD, right? So that's kind of like a first. This is why we have MACDs, mainly for this strategies, to kind of say that, hey, this lower time frame trend might be ending very soon and therefore rejecting that daily level, right? And then the 4 hour time frame needs to kind of confirm that analysis, right? So the 4 hour time frame is kind of the middle of the two. It is the middle of the two. And it kind of has to show us relatively the same thing. So the level on a higher time frame needs to be clear and visible, and it's obviously like clear and visible here. The pattern on a 1 hour time frame also needs to be somewhat visible. So on a 4 hour chart, we're typically going to have like a little double top or something like that. You know, some sort of deceleration for a few hours or a day, like in this case. You know, and the 4 hour time frame needs to be quite like overextended because we're targeting this 4 hour pullback. We're targeting this 4 hour point rate to 4 hour 50 or any level that's kind of better, right? Like these highs. So price action needs to kind of push out on the 4 hour time frame because we're playing this move on the 4 hour chart down to 4 hour support, right? So before we kind of dive into everything else, let's kind of look at this again. And, we said wave 1 breakout, major support and resistance on higher time frame. Higher time frame run or pullback is ending. End of trend on lower time frame. Price action pattern. Right. So we're going to go over all of this in a second, one more time. But wave 1 breakout, meaning that we're trying to capture this wave 1 breakout on a 1 hour chart. So that's where we're trying to go after, capturing this wave 1 breakout. That's why we got to kind of be sure that, hey, everything is being rejected up on top. So let's go to a little drawing here. This page is going to fill up with all our 5 strategies. So maybe at the end of this, you will want to take a screenshot at the end of these lessons. So let's quickly draw something. So I typically trade advanced breakouts off of descending triangles. You can trade them off of any type of price action pattern, being double tops or double bottoms, triple bottoms, head and shoulder patterns, falling wedges, many different ways to trade ABOs. My favorite is the descending triangle or the triangle breakout to the upside. But yeah, we can definitely trade pretty much all of those price action patterns because any one of those price action patterns might be saying that, hey, level on lower time frame is being rejected. But a descending triangle will look something like this. So the orange arrows are price action on a 1 hour chart. So assume this is a 1 hour chart. And we got that major level. Price action starting to stall in this major level, giving us this kind of price action pattern. And typically on the third hit of the bottom, this is kind of when we're going to start to have a breakout. That could obviously be pushed to the edge, and it's nice for it to be closer to the edge of the triangle. But obviously, not everything is always perfect, right? So we got to kind of, just do our best when it comes to analysis. But this is pretty simple, meaning that we're just looking for some sort of a price action pattern that starts to say, hey, this 1 hour trend is coming to an end, and this daily level or this higher time frame level is being rejected with this price action pattern. Right. And then we're going to have the 1 hour 50 EMA. Let's assume this line that I just put in there is the 1 hour 50 EMA. And I'm going to make this red just because the 1 hour 50 EMA is going to be red. All right. So we got this red 1 hour 50 EMA. And then we're also going to have this, just assume this is a 1 hour chart, right? So we're also going to have 1 hour 200. That's probably going to be like somewhat like this. And the 1 hour 200 is always purple, right? And that's the 1 hour 200 is equivalent to the 4 hour 50 EMA. Okay, the 4 hour 50 EMA, that middle time frame. So what we're trying to do now is we're trying to trade this breakout. And let me do our position sizing here. So position sizing, we're trying to capture the breakout move. So sometimes the entry will happen on the breakout itself if the position allows for it, So what do I mean by that? There's few things when we're position sizing. We need to have a 1-to-1 below this 1 hour 50 EMA to really have a solid edge with the advanced breakout. That means that, hey, if price action runs into this 1 hour 50 EMA and it looks like it doesn't want to break, I can still exit for about a 1, or some profit. So that's that. And therefore we want to have a stop loss that's equivalent to that. So if the pattern breakout allows for a 1-to-1 to the 1 hour 50 and a stop nicely below the pattern, if some of these wig down a little bit farther, we got to make sure that our stop is below the wicks, right? Because we might enter too early, we might be wrong in the entry and price action might chop a little bit, right? So we want to make sure that our stop is protected below all lows, right? Recent lows. And then we want to make sure that we can get a 2 up to the 1 hour 200 or 4 hour 50 EMA, which if you always kind of position 1-to-1 to the 1 hour 50 EMA, you're pretty much always going to have a 2 up to that 1 hour 200 and 4 hour 50. So that means if you want to push a little bit farther for 2.5, you can. It just may not hit most of the time. You might have to do a manual exit, which is fine, or you can just go simply 2-to-1, right? And goal is that is just going to be hit, right? So we want a 1-to-1. If we go into our screenshot here or to our notes, right? We want to have a we want to have an entry that is a live entry on a micro time frame trend change with a lower time frame reversal candlestick, right? And that needs to be at value, which value is kind of like around that pattern breakout or before. You know, target needs to be 1-to-1 to the 1 hour 50 EMA or better, right? So slightly below. And 2-to-1 to the 4 hour 50 EMA or the 1 hour 200, which is roughly the same level, right? Or better. Which I guess we can put the 1 hour 200 EMA in there as well. You know, so yeah, so that's where our 2-to-1 target needs to be. And stop, the stop needs to be protected by price action pattern and major support and resistance level, right? So when we now kind of like look at this diagram again, you know, entry somewhere around the pattern breakout or better. You know, pattern breakout would be great. If we need to go tighter to get that 1-to-1 and we feel comfortable with it, we go tighter. Stop below the price action, 1-to-1 to the 1 hour 50 or better, then 2-to-1 to the 1 hour 200 or 4 hour 50, which is relatively the same, or better, typically better. We want it to be better because a lot of times that level will not necessarily be a hit. So we kind of want it to look like this. So now let's kind of wrap up with the example. And yeah, let's kind of go through this analysis. So it's pretty straightforward, right? Daily chart is bouncing off of a major horizontal support and resistance level that typically when hit, price action reverses quite hard from it. And it's been hit a few times and it's kind of a zone. 1 hour price action is, or 1 hour trend is, looks like it's ending, and I believe it's ending. There's MACD divergence developing and price action starting to stall, form a triangle pattern at the top of that trend and at that daily resistance level, which that daily resistance level when drawn properly is the same level on a 4 hour and the same level on the 1 hour, right? So we just need to be seeing that rejection. So we have it on the 1 hour and the 4 hour time frame. Again, we can see pretty clearly that this area is a good area. MACD divergence is there, everything's good. So daily is good, 1 hour is good, right? Daily is overextended. Remember, we're not going to have a reversal candlestick. This is going to be early. This is before the reversal candlestick. It's the breakdown that causes the reversal candlestick, all right? So it's the breakdown on a 1 hour that causes the reversal on a daily chart. It's the trend change on a 1 hour that causes the reversal and rejection on a daily chart. Remember that. We always need to focus on the trend change, right? So we're trying to capture the trend change. So we got to make sure that, hey, we believe that the trend is ending. And because of this price action pattern, we believe that the trend is reversing right now. 4 hour price action is we're going to be targeting 2-to-1 down to the 4 hour 50 or better. So if 0.382 of Fibonacci retracement is better, we want to target that. If there's some high that's better, we want to target that instead. You know what I mean? So roughly in this area, we want to have a 2-to-1. So 4 hour price action, the characteristic, it's typically a little bit overextended, pushed away from that 4 hour 50 EMA, so that there's room to kind of play that bearish move. Now entry, right? So entry, when we're talking about it, it's live entry on a micro time frame trend change with a lower time frame reversal candlestick, right? So what does that look like? So to me, this was as the 1 hour chart right here was hitting that level. The 2 minute in this case looked like it was trending up, breakout, pullback, run, pullback, run, pullback, run, hits resistance, dies at resistance, breaks the trend. Now this is not a 2 minute trend. This is like a 1 minute or 30-second trend, and it broke. And I'm like, okay, well, that's the trend change. Enter on a micro time frame trend change as it's rejecting that area. Now I went aggressive here. Sometimes you don't have to. Sometimes, like even in this case, you could have traded the pattern breakout. I entered right here. I just stops above the highs and still targeted a little bit lower, but still at 0.32 most likely, you know? So you don't have to go this aggressive. You can often go looser, but I just kind of felt like, hey, I'm good. Now we need some sort of reversal candlestick. Now that will typically be showing up on the 1 hour at the time of entry. Typically, it will be showing up because again, as this 2-minute trend is changing and we're entering the trend change, it should be developing a reversal candlestick on a higher time frame, in this case being a 1 hour. Right? If we're looking at a 2-minute trend, the higher time frame to that is like a 1 hour. But this happened pretty quickly, so the reversal candlesticks were on the 15-minute tweezer top reversal candlestick pattern at the time of the entry, and I'm like, okay, well, that's pretty good. And 5-minute, roughly a few minutes, 10 minutes before the entry, there was again tweezer top on a 5-minute, rejecting that major level. So I'm like, hey, you know what? So that's good. And I can have a very safe stop loss, like way the fuck up there, so that if I'm wrong on entry and price action consolidates and still rejects this area, I'm way the hell up there. It should be good. And if I'm not, then obviously the idea was wrong and it failed. So but you want to be way up there so that the idea fails itself and now you get tapped out on a high test. You don't want to get tapped out for no reason because you're too tight. You know what I mean? So if you're going to go in aggressive, you're going to make sure that your stop is nice and wide. If you're going to go confirmed on the pattern breakout, your stop can still be a little bit tighter, still above the highs though. But typically it can be a little bit tighter because you're entering lower and it's a little bit more confirmation. Yeah, so that's the entry. And management, P1 again on the pattern breakdown or on the 15-minute trend change, right? So we do P1, we remove partial risk by clipping the high. In this case, that would have been this high right there on all time frames, 1 hour, 4 hour, 2-minute, 5-minute, 15-minute, clipping the high. In this case, you're removing quite a lot of risk already. P2 and then a pullback, so price action pullback, never pushed higher, and then it accelerated again. So P2 you want to do when you want to remove full risk, when you can kind of clip something and still be above the 2-minute, 5-minute, 15-minute EMAs, still protected. So that's kind of where P2 was done once price action pulled back and then broke the lows right there. So P2, remove all risk. And I potentially could have exited aggressively here on like a 30-second, 15-second breakout, for about 1.5. I didn't. I held the pullback. It was a lot of momentum. So I'm like, hey, I'm just going to hold the 2-minute trend, the 2-minute pullback, and I'll exit on this breakout for 1 hour, because it smashed right through 1-to-1 target, which was also like the 1 hour 15 May, like smashed right through and then just kind of came back to retest and continue. So I'm like, okay, well, I'll just hold the pullback because it's accelerating massively on a 2-minute, 5-minute, 15, and I still feel pretty good about it. So I held the pullback and then did eventually P3, locked in my 1-to-1, and then profit target was missed once, missed twice, and this was like a 30-second trend, and I exited on that 30-second trend breakout for 1.76R. Well, that's it. That's the whole characteristic of the strategy. Strategy 1, the ABO. This is what we want it to look like pretty much almost every single time. Now remember, this price action pattern might be different. It might be a head and shoulder pattern and you're trying to play the right shoulder and so on. We're going to have many more examples of ABOs as we go through the year, and then we're trading, So in our live events, we're going to be looking for the ABOs every single day. And if there are any good ones, we'll be taking them and then I'll record them as trade videos. So yeah, so that is it for strategy 1, the ABO, and I'll see you in the next strategy where we can build on top of this. All right, take care. Bye-bye.